What is going on, guys? Good morning. What is going on, guys? Let me know if you can hear me. All right. Let me check the chat real quick, make sure everything's okay. What's up, Stefan? How you doing, man? Hey from Belgium. What is going on, guys? Chris Wolf, good morning. Let me just send a message saying that I'm live right now in the Discord. 1 second. I'm live right now. Click this link. We got a lot to talk about today, man. We got a lot to talk about today. If you're just joining, make sure you hit that thumbs up. I always forget to say that. Also, obviously, the donate button is live and active. As you guys know, all of our live streams, we donate them to the Children's Hospital. All right. So let me get here. All right. What is going on, guys? What's going on? David Martinez, thanks for the info. Chris, good morning. Bagwati, good morning. Kenan, what's going on, man? How you doing? David Martinez, I've been doing great with verticals because of you. That's awesome. Yeah, verticals are definitely the way to go. A lot of people ask, what is the most consistent way to trade? Oh, wow, my shirt is like, it's invisible. The Wu-Tang logo is definitely yellow, but it looks white here because of the green screen. Yeah, a lot of people ask, what is the best way to make consistent income with options? Obviously, it is not by buying call options. Even though buying call options could be fun, that is definitely not the way for generating a consistent income. Cami Loaf says, greetings from Chile. Hey, what's going on? I love Chile. Been there a lot of times. Julio, what's going on? Mohammed, what's going on? Lewis, hey, Kevin, Dominic, what's going on, guys? All right, and if you guys have any questions, Wu-Tang Forever, do you ever day trade or always swing? I used to day trade a lot more. Definitely not as much as I used to. I just don't have the time to do it. And I definitely don't like doing it on live because a lot of people think that day trading is super active, and it isn't. Day trading is, I mean, you're going to be sitting there for hours before actually getting into a few trades here and there. You're not just click-clacking away all day, right? It's like hunting. You might be waiting for hours before executing a trade. And I don't know. For me, I know that people like watching it, but for me, it's just, it's too time-consuming and too boring. All right. So looking at the markets are definitely drawing down. The NASDAQ looks flat, obviously up 0.01%, but the S&P and the Dow are drawing down. There's a lot of reasons for this. I mean, obviously you can't time the market exactly, but as we always said, between the last catalyst and the next one, there isn't much activity or much in the way of news. Now, there's one thing that I think is left in the chamber between now and the holiday season, and that is the infrastructure bill. If you notice, the news surrounding that has been quiet, right? It's quieted down a lot, meaning that the next time it comes up in the news, it will likely be a catalyst. So I do expect to see a drawdown of some sort. I don't expect to see a major crash in the short term. I don't think a major crash will happen until, or can even happen really, until the Fed starts scaling back on their quantitative easing. Carlos Brown says Wu-Tang Forever. Yeah, for sure. Sioned Holt. Hello, Z. What's going on? All right. So let's take a look at some tickers here. So there's a few things that I'm looking at currently. Match.com, it was just announced that they would be entering the S&P 500. A lot of folks are waiting for a company like Zoom to enter the S&P 500, but Match looks like it's entering the S&P 500. And this would have been a great buy off the 300-day moving average. This one definitely slipped my list. Match is already a profitable company, but off of the 300-day moving average at major support going all the way back to November, this would have been a great pickup. And then obviously today getting major tailwinds from the S&P inclusion. I believe that's going to happen on September 20th. That's when Match is going to be added to the S&P. Am I going to buy it here? No, likely not. If it does retrace a bit, I might. I did a video before comparing stocks before entering the S&P 500 and what happens after they enter the S&P 500. And I think there was 16 of them, the last 16 that entered the S&P, and 15 out of the 16 were trading higher after entering the S&P 500 than before. So there's definitely an inclusion effect. So you could make a case for buying Match on any sort of retracement ahead of September 20th. All right, so there are a few things I wanted to look at. So Match was the first. Tesla is trading up higher today. Tesla is up almost 3% today. So I do think that Tesla, it has been pretty flat going all the way back to May, but I do think it's gearing up for another run. Obviously, there are the chip shortage concerns, which I think are slowly being alleviated, right? They're not going, that problem is not going to be solved overnight. But we have full service driving, which was the beta for the next full service driving software update that was announced as well. And if you look at Tesla's growth, I was actually looking at this article. If you have Seeking Alpha, I was reading through this article this morning, and it does a heavy deep dive. I might actually do a video on this, but it does a heavy deep dive into Tesla as from an investment perspective, right? And whether Tesla can actually hit 1,000 in the midterm, and based on its growth, based on its momentum, based on its EBIT growth, based on a lot of things. Long story short, it comes to the conclusion that yes, Tesla can hit the $1,000 mark in the midterm, and I believe that as well. And it looks like to me, in the midterm, obviously I'm not saying this is going to happen tomorrow, but it looks like Tesla is gearing up slowly after this accumulation pattern, gearing up slowly for another run towards at least towards the $800 mark. And then from that standpoint, you could see how the volume thins out until we get to about 830, and then after 830 you see a wave of volume. This is likely due to FOMO buyers coming in after Tesla has reached that 830 level and pushing the stock even higher. So if we can get to 830, I do think we will likely see another wave, another run up for Tesla. And I do think the $1,000 mark, barring any major catastrophes, I do think the $1,000 mark is actually in the short term, or is not short term, in the midterm, something that Tesla can actually achieve. Let me go back to the chat. And by the way, guys, if you have any questions or whatever, I'd rather you use the donate button as opposed to the super chat. So make sure that you use the donate button and then ask your question. And make sure you guys smash that thumbs up on this video right here. All right, is it too late to get into apps? Can we talk about TTD? Is now a good time to go short on QQQ? The NASDAQ is the last of the indices that I would short, my man. The NASDAQ, even though it looks like it is forming a top here, right? Like sort of a short-term rounding top, and you do see that there is major divergence between the RSI, right? And between the price. This right here is called major divergence, when the price makes higher highs, but the indicators are making lower highs. This is called bearish divergence. You could make a case for shorting the Q, for shorting the Qs, obviously not as a main position, but hopefully as a hedge. I personally like playing the VIX because the reason is you don't have to pick and choose which indexes to short. Obviously, the Dow Jones and the S&P are taking more of a hit today, but if and when the Fed starts changing up policy, growth stocks will take a major hit. And when I say growth stocks, I think people get confused. People think when I say growth stocks that I'm talking about Fubo, or that I'm talking about stocks like QuantumScape or whatever. No, those are not growth stocks. Those are unproven stocks that are growth hopefuls. They could be hyper growth stocks, right? But they're unproven at the moment. Growth stocks are companies that are expected to grow at an incremental percentage year over year. So if you look at Apple, if you look at even Tesla, if you look at Microsoft, there's a reason that it seems like every single quarter it beats out the previous earnings, because it usually does, right? Those companies just tend to grow. And the reason that those growth stocks take a hit when the Fed changes its policy or when inflation rises is because now those growth stocks that are expected to grow at, the revenues are expected to grow at 2% or 3% a year, now are being defeated by inflation, by interest rates, etc. So, long story short, what I can just play the VIX, because the VIX really is representative of the whole stock market, even though it's derived specifically from SPX futures. But it is derived from the whole. I mean, it is representative usually of the whole stock market. So rarely will you get a situation in which the stock market drops and the VIX doesn't go up. Now, the VIX can go up when the stock market goes up as well. You could see that divergence. Not very common, but I would much rather play the VIX. And we have a position on the VIX as well. We have the 17-18 short put spread on the VIX, so it has to be over 18, and we got to that 18 mark today. That position is up. I could close it out if I wanted to, or keep that hedge open. It expires September 8th, which is tomorrow. So if the VIX is over 18 tomorrow, then I will make 100% on that position. By the way, if you guys want access to all of our trades, click the link in the description below. Be a part of the wonderful Discord community that you see here. You get access to all of our trades, all of the analysis, etc. So anyway, that is my position on shorting. I think that you are I think it's a lot easier unless you have a lot of NASDAQ stocks and what you're trying to do is hedge specifically against those stocks, that's fine. But if you're just trying to play the downturn in the broader market, I think it's a lot easier to trade the VIX, in my view. Someone had asked me about TTD. I think TTD looks like it might be hitting resistance here. Yeah, so it hit resistance. It's actually forming this really ugly head and shoulders pattern, finding support at the 200 MA. This can easily fall through because of that pattern. You see that there is absolutely no volume in TTD coming in right now. It did hit a high of almost $90 just a couple of weeks ago. And I wouldn't begrudge anybody for taking profits here. Now, just because there's this short-term head and shoulders here, the larger-term pattern is actually bullish, right? Because this is an inverse head and shoulders. This is a largely bullish pattern. I'm invested in TTD for the long term, got in at a great price. I mean, it's crazy that just a couple of months ago, you were able to get into TTD below $50. Pre-split, right? And then after the split, it just took off. But, I don't mind establishing a position here at the 200-day moving average. Just know that the volume is waning. It is still a great investment candidate. I don't think there's a swing trade here, though, if that's what you're asking. Someone had mentioned AMC. Yes, AMC, again, I think that the golden play on AMC is to sell cash secured puts. I think it's the easiest trade on AMC is once it starts retracing, selling a cash secured put, and it's at support here, especially since it hasn't broken the 100-day moving average going all the way back to January of this year. So yeah, I think it's that's probably the easiest move on AMC. But one thing that does worry me is the fact that volume is declining on AMC as well. All right, let me get back to the chat. And again, guys, don't use the if you see the super chat button, don't use the super chat button. Use the donate button, please. That goes to the Children's Hospital. Hey Z, thanks for the live cast. I was curious to get your opinion on my modified DCA that I use on Ethereum. I put $10 to $11 a day. And if it hits a support level, I buy $100. Yeah, I mean, that's a weighted dollar cost averaging strategy. That's great. V and MA look like they're finding support. Yeah, I like V better than MA, but for sure. The reason that I like V is because the pattern is way more identifiable. I drew this pattern last week at some point, but it is creating this ascending channel that it's really respecting at the moment. And it is finding support at the 200 MA. Obviously, V pays a dividend. Mastercard does as well. But I guess from a purely technical standpoint, I'm more comfortable trading V at the moment than MA, right? There are cases to be made for each, depending on the fundamentals. You can read about each company and make your own assessment. But just from a purely technical standpoint, I like V here better than MA. It also made the watch list, the one that I sent out last night to the group. So what about TQQQ shares for the long term? There's a reason you don't want to invest in leveraged ETFs. Look up, Google why you shouldn't invest in leveraged ETFs for the long term. It's because the losses can compound, right? Like the gains are great, but the losses can easily compound over time if you are wrong. But sure, I mean, I don't mind if it's a certain portion of your portfolio. I think if you're getting in now, that you're a bit late. But yeah. Carlos Brown says seeking alpha is totally worth it. Yeah, for sure. Full self-driving. Oh, you must have been talking about Tesla. Yes. Where do you think Netflix is heading? I actually started taking profits on Netflix, to be honest. I do think that this is a delayed reaction partly due to the fact that they are entering the gaming space, which is going to seemingly or hopefully bring in a new revenue generating potential, right? Business potential there. And that is why they were able to crack the 600 here. But I'm starting to get, a little, especially being this overbought, I'm starting to be a little worry on Netflix's stock price above 600. I would start taking profit here. There isn't much in the way of volume at these levels. No, obviously, if you have a long-term portfolio and you don't want that tax implication, then yes, I mean, you just remain in your position. But I think in the long run, it's great that Netflix was able to crack the $600 mark. But it has a lot to prove in the way of gaming, as well as in the face of competition from other streamers. But so far, Netflix's numbers, especially after the last earnings round, look amazing, and they look unfazed by some of the competition from Disney, from HBO, etc. So yeah, but I mean, in the 600 to 650, I would start getting a bit nervous in the short term. OCGN, still hope? We don't trade on hope, my friend. We definitely don't trade on hope. I mean, this is right now it's trading in a boring, sleepy, sideways manner. I do think that you have to plan your exits with a stock like this, because on these pumps here, whether it's a large pump like we saw in February or May, or mini pumps like we saw in June, twice in June, and then once in August, you have to plan your exits. So I don't know what you mean about hope, but yeah, don't trade on hope, man. Trade on either technicals or fundamentals or both. Jordan Flores donated. Hey, thank you so much, Jordan. Thank you. If you have a question, leave it. Oh, here we go. Also, will Ethereum moving to proof of stake raise the ETH price or lower it? I really don't think in the long run that matters to Ethereum's price. I still think the underlying mechanism, right, the mechanism that's underpinning Ethereum is more important than whether it's proof of stake or proof of work. Now, obviously, there are energy saving implications depending on which mechanism they utilize. But in terms of the Ethereum smart contract model, I don't think that it matters a whole lot on its price, whether it's proof of stake or proof of work. I'll be honest. But yeah, in terms of where ETH's price is going at the moment, I mean, right now, we are in what's happening in my trading view? 1 second. Let's wait until trading view resolves here. Okay, there we go. Sometimes you have to click away from it. I mean, right now we are approaching, all-time high levels, and this pattern here looks like hopefully not, but it looks like it could be a double top. This could also be a cup and handle, which is a bullish pattern, right? So if it does something like this, where you have a cup, and then I'm not going to spend a whole lot of time drawing the handle, but you have a cup, and then you would have something like this, this is still a bullish accumulation pattern. So hopefully it is a rounding bottom or a cup and handle and not a double top, because a double top is a bearish pattern, right? It is a distribution pattern. But yeah, I mean, we are seeing a bit of a retracement in crypto today. I did a Bitcoin analysis on the Discord, and I talked about why I thought Bitcoin was hitting short-term resistance. Obviously, nothing major, but short-term resistance is because of one of the reasons was because of the pivots, right? So if you look at the pivot level, Bitcoin was hitting that R1 pivot, and we tend to see a retracement after hitting these resistance markers on the pivot points, right? And I was saying that if it does retrace either to the 200 MA or maybe the central pivot point, that it is likely that is an opportunity to re-enter. And plus the fact that El Salvador, I think they just announced today that it was signed into law that Bitcoin was legal tender. So you're seeing a bit of a sell-off, nothing too crazy, not for Bitcoin. I mean, it's down less than 5%. But back to Ethereum, yeah, I mean, hopefully that is an accumulation pattern and not a double top, which is a distribution pattern. But I don't think in the long run, proof of work versus proof of stake will really matter that much to Ethereum's price. Do you believe in investing into lithium long term? Depending on the price that you got in at, right? There was a time when lithium was really a victim of hyperinflation, but it really depends, on where you get in. Do you mind sharing Ortex data for Clove? Not at the moment. Let me take a few other questions. I need this chart set up in my life. Please briefly go over the studies you have on your chart. Well, in TradingView, they're not called studies. They're called indicators. In Thinkorswim, they're called studies. But in TradingView, they're called indicators. This pattern here, like these patterns I draw on my own, this isn't the RSI. This right here is the MACD. This on the right is called the volume profile visible range, and there's a few to pick from. The one that I like, the one that I pick is volume profile, is this one here. So it's called volume profile, and it's by a user called KV4Coins. So if you have the paid version of TradingView, you're able to use community generated indicators. And so if you have the free version, I don't think you can. So just keep that in mind. But this is the one that I like using. So that's the volume profile, the gray here on the right. And this here, these are called pivot points, right? I think in TradingView, this is called pivots traditional. And I have it set up to where it only shows me the last two, because once you open this, you'll see it. If you open this, it's going to open like 15 of them. And it just tends to make your chart look crazy. So I don't like to crowd it. I just like to open the last two. You can change the settings here. And instead of, I think by default it's 15, I just change it to 2. And then the rest are just the moving averages. So the 50, 100, 200 moving average, as well as the 21 EMA. That's what I have on right now. Give or take a few indicators depending on what I'm looking at. Good entry on XLF. How much is the paid version? Dude, Google, man. You can look that up yourself. There's different tiers. XLF looks, it is forming this double top here. I don't like XLF here, to be honest. I do like XLE for a long-term investment here. There are certain sectors of the S&P 500 that are not at all-time highs due to the pandemic. XLE is definitely one of them. This is the energy sector for the S&P 500. I actually have this on my watch list as well. So if you are looking for a long-term investment and you feel like the indices have completely passed you by, this is not an excuse not to invest in the indices, but XLE, there is a lucrative opportunity here because there's still a lot of growth left, and we will get over this pandemic. I know it seems like we won't. We will. It's just a matter of time. And for XLE to get back to the levels that it was trading at before the pandemic, I mean, you're talking about a growth from here. You're talking about a growth of upwards of 26%, which is nothing to sneeze at for a, blue chip index, right? All right, guys. No thoughts, questions, please. Ask a more poignant question. Thank you. Still holding Lucid? No, I'm not holding Lucid. I have Lucid cash secured puts, which we actually bought on one of these. We actually sold on one of these live streams, and that position is up, I want to say 20% this morning. So yeah, we sold cash secured puts on Lucid. I did not buy Lucid. I think it's a lot easier to trade cash secured puts on something like that. That way you don't have to determine whether you should buy, how much you should buy, etc. You could just sell a cash secured put for a price that you're willing to pay for the stock. What do you think of Google shares? Guys, please ask more poignant questions. You talk about investing, trading, long-term, short-term, etc. Cash secure puts on pins. Yeah, I like cash secure puts on pins. I actually mentioned that in the watch list as well. I think talking about cash secure puts, but you could see where this is where the volume profile starts becoming useful, right? It's not to say that pins can't drop. Obviously, it can continue to drop, but we're looking at data points and looking at what is most probable. And you could see all of the volume on pins. It's concentrated above the price that it's at now, right? There's so much volume here. Most of pins is traded above the $54 mark, going all the way to $80. So yeah, if the only thing I would say is don't sell a cash secure put on a stock that you don't want to own, and don't sell a cash secure put on a stock that you don't want to own at that price, right? So if you do get assigned, then I'm assuming that you're happy with buying pins at that price. Don't do it just because you feel like trading something. All right. So a couple of things that I wanted to talk about just real quick is what my expectations for the broader market are in general. And if you look at this chart here, I've shared this on one of my videos recently, but basically when the S&P 500 has a significant rally to start the year, right? So the year to date between January through August are above 15%. Almost always it ends the year even higher than that. However, take a look. So the dark blue lines, and this is going all the way back to 1954, but the dark blue line, the dark bars here, that is the rally from January to August, and then the light blue lines are everything after August through the end of the year. So you can see that almost in every instance, it trades higher, but it trades higher with much less momentum than what we saw January through August, meaning that momentum slows down. Only once, really, going all the way back to 1954. In 1954, the rally from August until December was even more significant than the rally from January through August, right? And only a couple of times, this being the famous 1987 year where we had the big flash crash in the markets actually traded lower than they started the year, right? So in this case, am I expecting the S&P 500 to remain positive? Yes, I do think that we could see a pullback and or a correction even of up to minus 10%. Okay, so let me take this back. So a pullback is anything up to 10%. A correction is 10%, but not greater than 20%. And then once you get into 20% and greater, you're in bear market territory. So I don't think we will hit a bear market. I think a pullback is extremely likely, right? Like it will happen. And I think a correction is likely, but I don't think a bear market is likely, especially not with what the Fed is doing at the moment. So as long as the Fed doesn't make any drastic changes, I do see the year ending even higher than we are now, albeit at a much lower growth rate following the trend that we see going all the way back to 1954, right? So that's what I think the market is doing. Let me check on the indices real quick. So Currently, Dow is down 0.8%, 0.4 for the S&P. NASDAQ remains flat. So kind of how we started the day. Obviously, we're only an hour into the market, but that's currently where we stand. You are seeing, it's crazy that on red days, you tend to see a lot of these types of headlines, right? Predicting major crashes. But, you know, that is the way that the news cycle goes. And I did also want to talk about AMD and Xilinx. But we could see Nvidia stock is, so the Nvidia deal with Arm, right? Because they were meant, the expectation is that they would acquire Arm. However, there are a few pretty powerful institutions that are against this deal, including Tesla, right? Tesla thinks that Nvidia's acquisition of Arm will make especially in the semiconductor space, will make the landscape less competitive and less advantageous to those companies that rely heavily on semiconductors like EVs. And there was also a news story that came out saying that the EU is also opposing the Arm deal. So actually here with bearish divergence, after Nvidia reported a dividend as well, and the fact that we are seeing some opposition to the Arm deal and some, I guess, uncertainty, and the fact that volume is declining here at this price, I actually would not mind, and I own a lot of Nvidia in full disclosure, but I actually don't mind a short position on Nvidia here. Now, obviously, I'm not going to short the stock outright. I rarely do that, but I'm saying in terms of playing with options, either selling a call spread or buying a put spread here. I'm going to have to look at the premiums. I will definitely do that after the stream because I see, like, if I open up Thinkorswim now, I can see my computer will likely slow down because I'm looking at the CPU metrics here on this other screen, and it looks like my computer is slowing down a bit because I have so many things open. So if I open Thinkorswim, I'm afraid that it will slow down even more. But I'm looking at I would look at potentially the 230, 235 put spread and the 230, 235 short call spread and compare which one will make me more money, and we'll likely do that on Nvidia. And I will definitely send that out in the trade alert. So again, if you want access and you want to see what I send out, link is in the description below. We have over 4,000 members. Come be a part of a very lucrative and active group. But yeah, I mean, this bearish divergence, the fact that, you know, Tesla as well as other companies are opposing the Arm deal, and this breaking news just came out here that the EU is also opposing the Arm deal. So it's a $40 billion dollar deal, by the way. So, you know, nothing to sneeze at, right? Yeah, we'll see. We'll see what happens here. Now, another chip company, AMD, there is something that I wanted to talk about here. AMD is looking to acquire Xilinx, right? AMD right now is seeing a pretty healthy retracement, sitting at the 21 EMA, but there could be a much cheaper way to acquire AMD. And no, I'm not talking about options, although that is on the table as well. But there could be a cheaper way to acquire AMD rather than buying the stock outright, and that is through buying Xilinx. So there isn't much opposition to the Xilinx deal. Well, not so far, but it's because the institutions that are likely opposing the Nvidia Arm deal don't have the same hold over the AMD Xilinx deal, right? But that is dependent on somewhat on China. So there is that risk there. But for all intents and purposes, most analysts expect that deal to go through. Obviously, nobody's Nostradamus, so take that with a grain of salt. But if you purchase Xilinx and Xilinx does merge with AMD, or AMD does acquire Xilinx, the deal calls for every share of Xilinx, you get 1.7234 shares of AMD, right? So if you bought Xilinx here at 154 and AMD is trading, AMD currently is trading at 109, right? There is currently a arbitrage opportunity. So if you get 109, let's just say 109, right? That's Nvidia stock price times 1.7234. So you're getting in terms of current price, you're getting almost $188 worth of AMD for every share of Xilinx. Now, Xilinx would have to be priced lower than 188 for this arbitrage opportunity to be lucrative, and it is. So if you look at Xilinx right now, Xilinx is currently trading at 154 as opposed to 188. So if you bought one share of Xilinx, and let's say the merger went through, you're already getting 1.7234 shares of AMD, which currently is worth 188. So obviously this is all contingent upon the deal going through, and this is all contingent upon, Xilinx stock not tanking, but essentially, or AMD stock not tanking, right? But essentially right now, for every share of Xilinx, it's worth $188 in AMD shares, assuming that the merger goes through. So this could be a much cheaper way to accumulate AMD versus buying out AMD outright, right? Just saying that there is an arbitrage opportunity there. There is a spread difference of about 155, 188, about $33, a little over $33, right? Difference in the value of AMD through the purchase of Xilinx versus buying AMD outright. So just want to put that on your radar, that if you are playing the Xilinx AMD deal, this could be the cheapest way to do it at the moment, right? But yeah, so looking to potentially short Nvidia. Again, I own a lot of Nvidia, so it's not like I'm shorting it outright. It is kind of a hedge, but also look at Xilinx as a way to trade AMD or invest in AMD. All right. What is your favorite U.S. sector for the next 6 to 12 months? Buying at the highs here, it's besides energy. I was going to say energy. Financials would be the other one, but I do need to see a little bit more of a dip. Do you think the market will have a correction of 10 to 20%? Yeah, I just talked about that. We must have crossed paths. Cash secured puts on SoFi. It depends. Stefan, do you want to own SoFi or not? If you don't, then no. If you don't mind owning SoFi at, what is this, $14.20, then yeah, sell those cash secured puts. Are you going to play Coupa earnings today? Yes, I will likely play Coupa software earnings today. We do see this nice accumulation pattern here, so there could be coming into earnings. Usually when you see a run up into earnings, the company has to do a lot on earnings day to prove that it can rally some more, right? Usually when you see those earnings sell-offs, it's because the company already rallied hard into earnings, and it is seen as a sell the news event. And after hours, the smart money is dumping shares on the FOMO buyers, right? That's why you see sell-offs happen after hours. And because after hours, the stocks are generally thinly traded anyway, that lack of volume makes those drops more violent, right? So for those of you that were new to the markets and you now have experienced a couple of earnings rounds, right? You might see that the stock reacts extremely violently after hours, even after reporting good earnings. It might not make sense to a newbie, but newbies always say, "Oh man, they killed earnings. Why is it dropping?" Blah blah blah. Well, that is the smart money that ended up buying here, for instance, right, or buying as support on something like Coupa, and they rode this up into earnings, and they know that the good earnings is going to incite a lot of FOMO buyers to come in after hours. And so the smart money is just dumping shares on the, for lack of better terms, the dumb money, but it's really the FOMO buyers, right? So that's why you see sell-offs happen after good earnings are reported. It's usually because you tend to see a run-up to earnings. Now, obviously, there's been times when we've seen a run-up leading into earnings, and then the company surprises even more on earnings and then justifies another rally, right? But usually, that is not the case. And you can also look at Market Chameleon and get a sense for what the stock did. And by the way, if you want links to all of these tools, they should be in the descriptions below. Hopefully you guys get some sort of discount on depending on which one you choose. But oh wow, SoFi is up 5.5%. FUTU up 7%. We played those earnings last week as well. I think we made, I want to say 80% on that trade before closing out, but would have ended up being 100% if we held it until expiration. What was I looking at? Oh, yeah. So the reason that I like Market Chameleon, obviously you can come up with this info on your own. You guys don't need to use paid tools, but when things are presented concisely, it makes your decisions quick and makes your trading and investing a lot more efficient, right? So the reason that I love Market Chameleon, apart from, giving you up-to-date implied volatility metrics and whatnot, looking at open interest, a very quick snapshot of how many options are traded, whatnot. So if you take a look at open interest, it tells you right away, the change in open interest, whether there are more calls than puts, etc., what the open interest numbers are, like right off the bat. Obviously, again, you can find this information for free, but there is value to it being concisely presented in front of you where you can make quick decisions. So if we take a look at one other thing that I like about Market Chameleon is the way that they lay out the previous earnings moves and whether the stock actually beat the expected move or not. So a lot of newbies might not know this, but there is an expected move based on a 1 standard deviation range. That is not so important to know. But basically, based on the options market, the stock is expected to move plus or minus a certain percentage, right? And if you look at, what are we looking at here? Coupa. If you look at Coupa, it always respects the expected move. So these blue bars here, this is the plus or minus range that the stock is expected to move after earnings. And only once in the last, 12 times did Coupa actually go blow past in either direction the expected move. Every other time it stays within the expected move. And then moreover, it shows you whether the earnings move was positive or negative, right? Regardless of whether it beat earnings or not. Again, beating earnings does not mean the stock is going to move up, and missing earnings doesn't mean the stock is going to go down. It really depends on the trading momentum leading into the earnings. So a lot of times you'll see stocks, vice versa, they're tanking upon earnings, and they report negative earnings, and then the stock goes up because the market sees that as a buy the dip opportunity, regardless of what the earnings results were, right? So trading psychology has a lot to do with how stocks move around earnings and not so much the earnings itself. Now, again, there are times when companies just outright beat earnings and they can justify another leg up, but something really unexpected has to happen, right? And I expect that to happen with Apple, by the way. I do think we will see some major announcements on the Apple car this year that will likely take Apple to that next trading zone, that unprecedented trading zone, that those uncharted waters above the 150 range. But yeah, so with Coupa, the way I look at it, there are a couple of things that could be lucrative here. An iron condor, which is a neutral strategy, right? You're basically picking a range and hoping that the stock stays within that range. That's likely what I would be doing with Coupa. Or something like a double diagonal or a double calendar, depending on the implied volatility metrics, which at the moment, implied volatility looks subdued, meaning, implied volatility is very low here, right? So yeah, look out for that trade as well in the trade alert. So we'll be doing Nvidia, right? I will likely be playing a short spread, a bearish spread on Nvidia, whether calls or puts, depends on the premiums. And then I will likely be doing a Coupa neutral strategy upon earnings, which I think they're reporting earnings after market today. Yeah, September 7th AMC, which means after market close. So look out for those two things. Let me see if I missed any donations. I don't think I have. You guys are very lackluster on the donations today. Guys, don't use the super chat button. If you see it, use the donate button. All right, I think I just got Jordan's donation. That was it. All right. I wish you had a link for Market Chameleon before I got it. I saw it on some of your videos. Yeah. it's amazing. Whether you got it through my link or not, doesn't matter, as long as it gives you benefit. Hey, dude, I know when I'm defeated. Had a burger in and out, and it was the cat's meow. What's up with Jazz? I think Jazz is sitting at support last time I looked at it. I'm not sure. Again, guys, please, with the lazy questions, ask a more poignant question. Jazz is sitting at S4 support. Still sitting at support here. I went over my fundamental analysis for Jazz and the fact that I think for the long term, as long as it finds support, you could make an entry, especially with majorly oversold markers here, right? I don't mind Jazz here, but what's up with Jazz? I don't know if that's what you meant, but hopefully. Tito Malding right now? I have no clue what that means. Think what specifically about it. About options or long term? Ask a specific question. Yeah, ask a specific question. All right. QCOM is frozen. What do you mean frozen? As in like halted? I don't think QCOM is halted. No, doesn't look like it's halted. Why would it be halted? But Qualcomm is an American semiconductor company that I don't mind dollar cost averaging in for the long term. What type of option trade would you use for Lulu? Good question. Now, I own Lulu in full disclosure, but you see the double top here. I think there was a lucrative bear spread on Lulu after it hit the R1 resistance again, forming this double top. I think here, maybe a more neutral strategy. Now, obviously, they're reporting earnings tomorrow. And are they reporting after market close or before market open? Let's see. They're reporting tomorrow after market close. And if we take a look at its last few earnings moves, again, Lulu, not like it respects the expected move largely, but 3 times it has, and this was early on, this was before the pandemic, but 3 times it has completely gone outside of the expected move. However, since the pandemic started, it has never. It's always stayed within the expected move. On Lulu, I would expect to play something like an Iron Condor, especially the fact that it did hit resistance. This would have been such a sweet bear spread here at the, like right around the 415 mark. Would have been an amazing bear spread, but you can't play every single stock, right? So can't cry over spilt milk. In this case, I wouldn't mind playing, somewhat of a neutral strategy with maybe 390 as the midpoint, where it's at currently, maybe 415 being the high point and, 360 being the low point. I would have to look at the expected move in Thinkorswim, but let me actually write this down before I forget what I'm going to be playing. So, I'm going to be playing Lulu, Coupa, and Nvidia. I will send those out after this live stream, which I'm looking to wrap up within the next 10 minutes so that I can make some trades. All right, Anonymous, thank you so much for the donation. Isaac Nunez, thank you so much, man. If you have a question, leave it. QCOM is so undervalued. Yes, but like CRM, it's a boomer stock that people are not going to pay attention to until it actually flies, and then people are going to be like, oh, is it too late to get into CRM? Is it too late to get into Qualcomm? Alan S. Jag X, please. Jag X, what? Please, ask a more poignant question. Love your DD, man. Keep up the good work. Thanks, Josh. What is the VIX ticker used to trade? VIX. It's just VIX, VIX. If you're on Robinhood, you're not going to find it. Mark Werner, buddy, what do you think about him X at 12? I don't know much about this company. I guess you could sell a cash secured put. I mean, like from a technical standpoint, it looks like it's sitting at the 200 MA support. Don't know enough about the company to give you major DD on it, but sure. I mean, if you like the company or the technical setup, it's at the 200 MA. Why do you guys warn about owning shares after getting assigned on a cash secured put? Can't you just sell the... Okay, Alvin, this is a good question. Yeah, I do think that people make too big of a deal about getting assigned. They look at it as like the boogeyman. They're so scared to get assigned. But yeah, certainly it's not the big bad wolf that newbies make it out to be. If you get assigned, you can easily sell calls against your shares, right? Or you could sell the shares themselves. You're 100% right. Now, the bummer is if you sell cash secured puts on a risky stock and it tanks well below your strike price, then you're in deep water, right? Because you can sell the shares, but you're selling them for a lot less than you bought them for. So anything about cryptos, Sunny says. I don't know, dude. I don't know what that means. If you have a specific question about a crypto, let me know. But I did go over Bitcoin earlier. E-Trade doesn't have a VIX ticker, but VIX-X. Okay, that's probably the same thing. So call up E-Trade. Call up E-Trade and ask them if that's the same thing. How do you choose a stock to trade? That is such a complicated process. Do you use a scanner? No, I don't. Not really. Unless, when I used to day trade, I would look at scanners a lot more because I was trying to analyze volume data, but I don't really anymore day trade as much as I used to. Or do you have a list of stocks? It's a combination of things, man. It's stocks that I have in my mind. It's technical setups that I see. I have the news blasting usually in front of me, so I'm listening to news all day about certain market segments, certain companies, etc. Somebody might ask me about a ticker that then I look at. I'm like, oh shit, that actually is a good setup. Let me look into it further. There's so many things that go into it. But yeah, if you're day trading, you're likely going to be using a scanner because you want to look at volume information, especially if you're day trading small cap stocks, right? ATVI is looking cheap. All right. Yes. I've mentioned about video game companies going into the holidays, Nintendo, as well as companies like ATVI. Now, it is finding support here, but this pattern still looks a bit dangerous to me, especially today's candle. This looks very bearish. So I would likely wait before buying in further on ATVI. And if you look at Nintendo, where are we at with Nintendo? We bought Nintendo, I can't remember when. I think we bought it as it breached a 300 MA. So maybe we bought it a little higher than it is today. But I do think there's an opportunity on Nintendo leading into the holiday season as well, especially now after Nintendo has found support at like the $56 level. But yeah, I think there could be a lucrative opportunity on ATVI as well. Just it's a falling knife at the moment. Would you mind showing us your desk setup for trading? And your video recording setup. Sure. Yeah. If you want it on an Instagram story, yeah, I wouldn't mind doing that. I wouldn't mind doing that at all. 1 second. I wouldn't mind doing that, but I'll tell you right now, like, because I'm always traveling, I don't have the most sophisticated trading setup. I mostly trade off of my laptop. That's it. Like, you don't need a zillion screens. You really don't. So I have a TV that has CNBC blasting. Sometimes I have the CNBC live stream on here, but it does slow down the computer. But I don't have the most sophisticated trading setup, man. Like, I really don't. It's here. I just have an extra monitor, like a 27-inch monitor. That's it. All right. Lean Supreme donated $20. Thank you so much, man. If you have a question, please throw it in there so that I can answer it. But thank you so much for the donation, man. Thank you. What are your news sources? Seeking Alpha, Barron's, Market Watch, CNBC Pro, Investors Business Daily. There's a lot of good ones, man. I used to read the Wall Street Journal a lot more. I think they've gone down in quality. That's just my personal opinion. No shade. I do think that some of those other news sources that I referenced have actually beaten it in terms of quality. Oh, TipRanks is a great tool as well, because TipRanks merges. If you look at TipRanks, and I also have a discount in the description for TipRanks, but TipRanks, not only do you get the news from it, right? So you'll see the news here, as well as opinion pieces and whatnot. But if you take a look at a certain stock, it will give you, and I haven't seen another service that does this, by the way. And again, you can find this stuff for free. But what I love about TipRanks is it also gives you the analyst grades, all in a collected manner, right? Like they're collated, and they tell you how long ago the call was, and then what the price target is, what the position is. And above that, right, it takes a collection of all of these ratings and then gives an average rating for the stock based on the major analyst outlook. So if you look at NEO, for instance, it's rated as a strong buy with a long-term upside of almost 60% at $66, right? And then it goes into each of the firms that gave those targets. So Morgan Stanley, Nomura, Citigroup, Bank of America, Mizuho, etc. So yeah, I think there's a link to TipRanks also in the description if you want a discount. But yeah, I do think the Wall Street Journal has kind of fallen off a bit. But those sites that I mentioned, I think you'll get a wealth of information from. Like, I would be surprised if you ran out of material looking at some of those things that I talked about. All right. Let me see if Lean Supreme has a question, because you did leave a donation. If you got a question, Lean Supreme, let me know. No, Matt So said, hit the like button, please. Yes, hit the like button for sure. Is Beyond Meat a good investment stock? I personally have gone back and forth with this. So I invested in Beyond Meat a while ago. It really depends on the price, right? So there was a time at which I think Beyond Meat was a decent investment, but if you take a look at its numbers, it's not great. Especially its profitability numbers. If you look at its value, right? It's like price to earnings, price to sales, etc. It's a very, very expensive stock. So its price to sales ratio is trading at almost 16, right? So the sector median, meaning the companies that are in the same sector, the average is, or the median is about 1.54. So it's trading at almost 900% more than other companies in the same sector. So by all accounts, it is a terrible investment. But if you take a look at its technicals, it doesn't mean that you can't make money based on a lucrative setup, right? So when Beyond Meat does hit support, and I drew this line here a few months ago, but when it does hit support, it doesn't mean that there isn't a good buy on Beyond Meat. Now, obviously, a couple of these pumps can be chalked up to the meme rally, right? Because it has made Wall Street bets a few times in the last year or so. But it is a very volatile stock, man. And is it a good investment? Not based on the numbers. But again, it doesn't mean that you can't make money. So you have to differentiate trading versus investing. Is Docu at a level dollar cost? I think DocuSign they reported earnings last week. No, this is not a good dollar cost averaging position. It is at the top of the broadening wedge. So I would not call this a good spot to dollar cost average. Now, is it a good company to dollar cost average in? Yeah, I mean, they just reported another profitable quarter, right? When they were expected to come in at a loss. Now, in terms of whether they're trading what kind of multiples they're trading at, we'd have to take a look at the metrics, right? So its price to sales is around 30 or 33 if you're looking at trailing 12 months, around 30 if you're looking at the forward price of sales. Price to book is insane, trading at 288. Probably not a lot of value there from an investment standpoint, honestly. And from a technical standpoint, it's at the top of the broadening wedge. So no, I don't think it's good here. I would actually, if I owned Docu, which I do, but if I owned a good amount of it and I didn't care about the tax implications, I would look to start trimming Docu here for sure. All right. Let me go back to the questions. And then I will see you guys on the Discord. Riot dipping. ATVI. Good. I just talked about ATVI. Scroll back. Rewind it. Why did V get a recent beaten and would now be a potential swing? I don't know what that means. Get a recent beaten? Do you use Greeks when trading options? Of course. Google the traveling trader call options, right? Google that and look at there's a video that says why I never buy call options or something like that. But I talk about the Greeks in there. So if you want a good overview of Greeks, look at that video because I go over Greeks. But yes, of course I use Greeks. There's no way to trade options without it. Crypto's crashing a bit. Let's see. Usually when people say that, they're being hyperbolic because it can't be crashing a bit. It's either crashing or it's not. No, this is, look, if you looked at the, I sent this out yesterday. If you look at my analysis on Bitcoin, blah, 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 ultimately, blah, blah. I was saying BTC USD is at the R1 level, and there's a volume cluster if we could break with blah, 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 blah. We could see short-term resistance here and a small rejection, right? And it's because it was at the R1 level here, right? And we tend to see this when it hits these pivot resistance points. Plus, there's a sell the news event from the El Salvador going live with Bitcoin. But as I said, there could be a lucrative opportunity to pick it up after this dip. So we'll see. All right. Big fan getting here late. Thanks, Ron. All right, let me see. Is CHPT a good options play for close next year? It depends on what options you're talking about. I would not buy calls on CHPT, I'll be honest. But I don't mind selling options on CHPT. Hey, Z, I had a question. Fat, what does that mean, bro? Did you leave a donation or are you just fucking with me? Don't have a question, just showing some love for the kids and enjoying the stream. Thank you so much, Lean Supreme. Glenn, thank you so much. Dude, that's big of you. Thank you so much, Glenn, for the donation. Oh, Fat, you did donate. Okay, let me get to your question as well. But thank you so much, Fat. Thank you so much, Glenn. Again, if you guys have a question, post it. I will get to Fat's question in a second. Glenn, if you got a question, man, please post it. If not, thank you so much for the donation. That's amazing. Fat says, is ADSK presenting a good entry opportunity here? Seems to be holding the trend line, but quite weakly. Yeah, so I mentioned that ADSK there is a good opportunity here on the earnings overreaction. I think it dropped like 10% after earnings, even though it reported a very profitable quarter. I think there was a bit of a soft guidance, but I don't mind dollar cost averaging here on ADSK. For all intents and purposes, it looks like we might get to that 300-day moving average. Obviously, trying to bottom hunt is not a great exercise either, though. So if this is enough of a retracement for you to invest in a company like Autodesk, then you could start dollar cost averaging here. But the 300-day moving average is around 275. So it is looking like there is a potentially good entry here once it finds support. So, yeah, I definitely like Autodesk here for sure. And then let me see if Glenn actually posted something. No, I don't think. All right. Oh yeah, you did. No questions. Just appreciate you. Thank you so much, Glenn. Thanks a lot, man. Thank you so much for the donation. Nomad, are you playing RH on earnings? Yeah, I have a cash secure puts. Cash secure. Oh, sorry, RH. So when people say RH, I always think about Robinhood, but you're talking about Restoration Hardware, right? So this one I think is tough to play. I would have to look at what it did in the previous earnings rounds, but it looks like there's a delayed reaction on RH around earnings time before reacting the next day. That's what it looks like here. It does make somewhat big moves. Like if you go back to September 2020, it reported earnings, and then the next day it climbed 20%. If you go back to December, it reported earnings, and the next few days it dropped 10%. So it looks like there is a delayed reaction on RH. It reported earnings in March and then climbed 25% on the next few days. So it doesn't necessarily happen on earnings day. It could make sense, actually, seeing that pattern now. It could make sense to wait for them to report earnings and then put in your play. And this also has the advantage of not getting IV crushed. So, for instance, if Restoration Hardware does post good earnings and we see a delayed reaction, you're going to see IV drop, but they're going to post good earnings. So then you could play something like a diagonal spread or a calendar spread, which actually benefit from rises in implied volatility, right? So I will likely wait to see them report earnings before making a play, just due to the fact that, just look historically, they tend to always have delayed reactions after earnings. So this makes it even less of a guessing game because you can wait until they report before playing earnings. A lot of people think that playing earnings is just isolated to, playing the stocks on the actual earnings day, when you can actually wait to play earnings, or you could play even, a week before. It really depends on the trend of the stocks. Love your explanation of growth stocks. Yeah. Thanks, Ron. Thanks. Yeah. A lot of people think growth stocks means like, the meme stocks or some of the YouTube stocks that were really popular last year. But growth stocks really mean stocks whose revenues and earnings grow at a steady rate year on year. Do you always have a stop buy order set up on VIX? No, I never do. As a matter of fact, it's the exact opposite. Yo, Papa Z, hope you had a good Labor Day weekend, Mr. Handy Hands. Yeah, it was cool. Hope you had as well. Hope you did as well. All right. I think I'm gonna end the stream there. If you had 10K to invest today to forget about for 10 years, what play would you do? If you really forgot about it, just throw it in the NASDAQ. Done deal. If you really were going to forget about it, meaning, you weren't going to look at it every single day obsessively. But yeah. All right, guys. Yeah, hit that like button. Thanks, Nomad, for reminding people. I always forget to remind people. Hit that like button. Make sure you donate to the Children's Hospital. Thank you guys so much for the live stream. I will see most of you on the Discord, and we will keep on keeping on with the live streams, and obviously the regular videos as well. But yeah, guys, have a good day. Talk to you guys soon. Peace.